which is more kind of a broader look generally at employment and software. That one's out, Caroline. It's up. I think it's a pretty solid one to start with because it does generally align with a lot of the themes we've been talking about with businesses for the most part thriving, and this idea that there's going to be some hiring and maybe some government layoffs, people looking for jobs, you know, all this stuff kind of intertwines.
Yeah, and it looks like it's getting a pop after this earnings report. This is an interesting one because shares are still down about 2% year to date heading into this report, but it's had a really upbeat month. Shares were up about 15% heading into the print in November, and it looks like it could build on those gains. In terms of the actual numbers that I'm seeing, Q3 adjusted EPS of $1.89 came in ahead of the $1.72 that Wall Street was looking for. Revenue, meanwhile, of $2.16 billion beat the $2.13 that analysts were looking for. It looks like that was about almost 16% revenue growth, 15.8% from the year ago. Subscription revenues, meanwhile, were up about 16% as well. Just to put that into perspective, in the second quarter, revenues were up 17% for both overall revenue and subscription. So a slight sequential deceleration, but still better than what analysts were looking for. In terms of I was just looking here for the guidance from Workday. It looks like adjusted EBIT margin of 25.5%. So that's basically a little bit higher than they initially had forecast when they reported last. And then in terms of subscription revenue, looking for about $7.7 billion in subscription revenue. That's basically in line with what they said before. I don't see if that's a range, but previously it was 7.7 to 7.725. So we'll see what they have to say about that. But overall, it looks like a beat on both the top and bottom line, and it looks like it's going to be rewarded for this. But again, keep in mind, this was a stock that's far underperforming the broader market and the overall sector. Yeah, coming back down to 275-ish here, and to your point, lower on the year, so back down to like 270. The thing is, there's not a lot of like big surprises here. The margin, which did improve to a year ago, was above the expectation, so I think that's pretty good. They definitely deserve some credit for that. The overall revenue growth of 16%. I mean, I think that people still kind of underappreciate how much steady, reliable growth there is in the software space, Scott. It's just more kind of a function of who's surprising the most, and there's not a lot of big surprises here.
Yeah, you know, kind of easy and steady as it goes, right? Yeah. And I think that this is probably one of the reasons, not probably, this is definitely one of the reasons why 35 analysts are offering recommendations of a buy for Workday still. Wow. And you know, Workday, as they are integrating the AI and the machine learning into their proposition, you know, they're making some pretty good headway here and are definitely creating a good value proposition. We continue to see growth, you know, with the kind of numbers that we're seeing today. We could even expect operating margins to expand from 25% to maybe even 30%. So, you know, in a market where, you know, there's competition and there's growth, Workday's definitely pulling its own, and I think that we're continuing to see that today. Yeah, well said, especially if they can reach some of those margin goals, because it seems like they are making some progress towards that in this report. Speaking of progress, speaking of recovery, let's talk some Crowdstrike. The most interesting one, arguably, but also just the notion of steady as it goes is pronounced here. The revenues came in over $1 billion. The street was looking for 983, so kind of a seminal beat there, above $1 billion. Also the earnings, 93 cents adjusted versus 81-cent expectation. That seems to be pretty good to me. It seems like pretty good beats. The outlook for the fourth quarter might be sort of ho-hum. 1.03 to 1.04. Street was looking for 1.03. And they did boost their outlook for the fiscal year earnings, 374 to 376. Previously, they saw that number only getting up to 365. Well, it seems pretty good to me, Caroline. Maybe the fourth quarter expectations were not huge beats, but the fiscal year expectations look pretty good on the bottom line. So, you know, how bad could it be?
Yeah, and surpassed $4 billion in annual recurring revenue. I know the expectation was for around $4 billion there. So I think that, you know, something to consider when it comes to CrowdStrike is just how big of a bounce it's had since those lows in the summer, up more than 80% from those levels, and up more than 20% in November alone. So I think the expectation is certainly high. In terms of, I was just checking here, so annual recurring revenue up 27%. Let's see here. No, I was sorry. I was looking to see. I thought maybe I found something that might actually be disappointing. Not necessarily the case, though. But it does seem like we're seeing shares head lower. One thing I think also I noticed with this one is, despite the fact that Wall Street very bullish on this name, more than 80% have a buy rating. The median price target on the stock is $337, and if you take a look, shares closed at $364 today. So you know, a lot of bullishness here, but the price target doesn't necessarily reflect that. So despite the fact that we have seen quite a few hikes heading into this report, it will be interesting to see how the analyst community actually, you know, kind of responds. But I think the big thing here was when they last reported, it was on the heels of that big global outage. But they basically said because it happened within the last 2 weeks of the second quarter, a lot of deals got pushed through to subsequent quarters. They said they basically were still in the pipeline, but they were delayed. So I think the big question was, you know, did that business stick? And there was some caution that maybe it could interfere with business more than the bulls were hoping for. Seems like based on these initial numbers, it looks pretty good, but let's see what they have to say in terms of commentary too.
All right, good assessment. I like the point about the timing of those deals getting accelerated, pushed through. I mean, ultimately, the question was with CrowdStrike was after that incident if customers were going to bail. It doesn't seem like there's a lot of evidence of that really here at all, Scott. Seems like, you know, when they hit big milestones like this, ahead of expectations, that it's kind of back, you know, that maybe it didn't need to crash ever to begin with.
Yeah, and maybe that's the case, you know, but, you know, we're still going to wait one more quarter before we see all of that pull through. You know, these things kind of lag. And so we'll see how that goes going into next quarter. I agree with you. I'm still going to be, you know, a little bit cautiously optimistic around that because of all of the things that happened back in July. You know, we've got some PTSD pull through on some of this stuff. So we'll see how it continues to go. However, you know, they have continued to increase their revenue. They've increased their presence in the marketplace, and as they continue to do that and coming up with more intuitive or more innovative type of opportunities for CrowdStrike to protect even individuals, companies, etc. So they're expanding, they're growing their market. You know, they're also implementing ML, machine learning, and AI in it in terms of their response times, etc. So there's a lot of upside potential still for CrowdStrike. I like what I'm seeing today, and I kind of expect that it would continue to fall through.
Yeah. The potential for customers to demand discounts still kind of there, lingering, but you know, just the full year earnings. I know the fourth quarter seemed to miss a little bit, but the full year earnings for the fiscal seem to be solid enough. The other thing too is just the growth really hasn't been derailed when you're still hitting 30%. You know, there was kind of a natural slowdown period since, you know, maybe like a couple of years ago, but you really can't, like if you look just going back to the start of this year and you look at all their growth, there's no like obvious place where this, you know, mistake occurred. It slowed down a little bit, but that was, you know, it's all still very close to 30%. So it's hard to really say that they've fallen behind in their leadership in the market. I don't think at this point. Dell, I think probably really important. Let's go there because of the server connection and the fact that the stock's done really well and it's getting hit right now. Dell for many was kind of a shocker AI winner in the relationship with NVIDIA, but then also lately that some of their server offerings might be able to replace super micros. And so the stock had been in this big comeback as well after peaking out in the summer. So the numbers kind of missed a little bit here. It might be PC stuff though, because obviously it's still a big part of the business and it's going to be a more sluggish one. But to kind of just go to the infrastructure solutions group, 11.37 billion versus 11.3. Not bad. I mean, a little bit of a beat, but not a massive one. Their total revenues of 24.37 billion were slightly below the 24.5, roughly 24.6. Operating income a little bit ahead. Kind of seems like the server boom, not like has petered off, but the analysts had their head around it pretty good, Caroline. You know, no real beat here from Dell on the server stuff.
No real beat, but still 34% year-over-year growth. And then the overall revenue growth came in up 10%, but that was a miss, as you said. But yeah, if you take a look at the Client Solutions Group revenue, down 1% year-over-year. So I think that the AI-optimized server demand, definitely the bright spot for Dell. That's why we've seen shares rally so much this year, up, what, 85% year-to-date or something like that. But as you said, it does still have the PC business. That, of course, is what analysts were definitely more cautious on, as it is still a big part of the business as well. But yeah, so it was a beat on the bottom line and miss on the top line with that 10% revenue growth. But I would say, I mean, 34% year-over-year growth for the Infrastructure Solutions Group is still, you know, somewhat impressive. It's just a matter of, is it impressive enough to see this stock continue to run higher? I mean, it's up 15% this month alone. Doesn't seem to be the case right now. But you know, we'll have to see what they have to say on the call.
Yeah, servers and networking, 7.36 billion. Some of the analysts were looking for closer to 7.5. So that's the server portion within that Infrastructure Solutions Group. Caroline just brought up there, which was still up 34%, slightly ahead. Storage revenues were ahead. Servers and networking revenues slightly below the estimate. I mean, that group is growing at a really fast clip, but the perspective is that the client solutions, which is the more legacy stuff, Scott, is still bigger. The total revenues there of 12.1 billion were down from a year ago. But the infrastructure side, the server stuff, I mean, it's getting up there, 11.37 billion. It's probably going to be a big deal symbolically when those two parts of the business flip, when the lagging stuff becomes smaller, and we're almost there. It's almost at a 50-50 split right now.
Yeah, and I think that's going to be key. You know, when we hit that 50-50 split, I think that we may be able to see some real differentiation in that. Now, we're seeing Dell, though, you know, an old workhorse, still paying dividends quarterly, you know, just a solid company by all estimations. And, you know, we're seeing, you know, the analysts are still giving, by and large, buy ratings, maybe one or two holds, but mostly buy ratings on Dell as well. So, you know, optimistic outlook for Dell. We'll continue to watch them. I would anticipate that we could continue to watch them with continued growth.
All right. Seems like that's going to be the story, and it's going to be double digits, but it's going to be low. Go ahead, Caroline.
No, I was just looking here at some of the commentary. Dell's pipeline for AI servers was up by 50% in the period. AI is a robust opportunity for us with no signs of slowing down. So the commentary is still largely optimistic when it comes to AI surrounding Dell as well.
All right. Good stuff. Good assessment, guys. Appreciate that.